What's up, everyone? It's Sam from Investors Underground. We're back with episode 2 of Trading Takes, the show where we discuss current events, trends, and just about anything and everything relating to the market. Today, we're focusing on loose barrels, pot, nuclear power, and can Dave Portnoy save the budget airline industry? Quite the mix. Some aha moments that were a game changer in our trading journeys, and we'll debate, is the market rigged? I'm pleased to be back with the usuals, Chris, Judah. How you both doing?
Guys.
What's going on?
How's your week been, boys? Good?
Good. Short week.
Yeah, it's nice. Nice to have a 3-dayer. We got some feedback last week that our backgrounds are really bland. So I thought to myself, who has the most exciting background that I know? And tonight's special guest, Godfather, Stan. How you doing?
Hey, Sam. Doing well. Thank you. Thank you for having me.
Good. And just in case anyone doesn't know you, just a really brief intro. Obviously, you're a huge part of the Investors Underground community, so just a brief intro.
Sure. My name is Stan. I been in IU for quite a few years. I've essentially been trading the market since around 2008, 2009, give or take. Seriously, around 2014 is when I started seeing some traction, and then full time since about 2018, 2019. I mainly focus on, for me, what I like to do is look at price action. I'm very price action driven, not so much oriented by cap or float or anything like that.
Yeah, that's great, and it's great to have you here. So thank you for your time. And starting tonight, we are giving away 1 free month of Investors Underground access. All you have to do is comment or ask a question. So what's your key takeaway? Any questions for Chris, Judah, Stan, or myself, just comment below. And yeah, one of you will be getting a free month of IU. So let's get started. So lots to talk about tonight. And we've decided, and Judah, this was one of your topics, Ozempic, which seems to be, I don't know if it's just because I follow Sanglucci, but that seems to be like the only thing he tweets and talks about. And this week, Ozempic reports of a really negative side effect. Unfortunately, a woman required surgery and now is going to have diarrhea for the rest of her life. So let's talk about side effects, and do they affect the price of a stock? So it's Novo Nordisk's MVO. Judah, what do you think?
So, in general, I don't think side effects are an issue. I don't think side effects are that big of an issue if it's not really affecting you that much. Like, you have to look at risk and reward, and everyone's different. Some people have more severe side effects than others, and people at this point would rather take Ozempic and shed that weight and deal with the side effects than really look at the full side effects of it. And Ozempic is not even meant for you to lose weight. It's a diabetic related drug, and the side effect is weight loss and loss of appetite. So you're taking this for a side effect. It's like people taking birth control for the side effect of clearing up acne. To me, it doesn't make sense, but I guess a lot of people, it's worth it for them. And I just think it's insanity, but it's been working for people, and as long as people don't have side effects, there's no reason for them to give it up. And that goes with anything, if you're eating unhealthy all your life, you don't have side effects, why would you stop eating unhealthy? So until you experience it yourself, you're going to continue doing it, and so many people are on it right now. I don't know if the side effect number is hitting the amount that people are taking it and not getting side effects from it.
Yeah, the thing is, so I used to work in the pharmaceutical industry, many years ago. The thing is, every drug will have a catalog of side effects, and often it's like a really simple, it's just a simple like balancing act. Do the positives outweigh the negatives? And often, considering the amount of people taking Ozempic, it's huge. And just to put it in context, it is an absolutely blockbuster drug. It's 52% of Novo Nordisk's revenue, which is huge. Like you get a lot of pharmaceutical companies, if you look back, they have a blockbuster drug which really puts them on the map. And in terms of Novo, the biggest Danish company, one of the biggest companies in Europe, it's huge. And I just flashed the MVO chart. In terms of the effect, I mean, it's nothing, right, Chris?
Yeah, because with any bio product or anything like that, you're going to have on-label usage, off-label usage. You're going to have side effects. I mean, Tylenol has side effects. So, like you guys were saying, it's more the risk reward over a large population sample, not just a rare case, here and there. But like, is everyone having these symptoms? And no, they are not. Of course, you're always going to hear about a couple bad side effects. But in order for a piece of news like this to really move a stock, you have to think about, okay, so NVO, the largest product, 50% of their revenue is coming from Ozempic. And so you have to think about, okay, if a headline comes out and if it were like, 35% of people were experiencing this side effect and this is a huge issue and we're going to have to halt the product, that's so much different than a case was reported with this. If someone were to, or a couple of people or 10 or 20 people were to pass away from a product, then that can be something where the FDA or some kind of regulatory agency can come in and halt the production. And so if you were to halt the production of a company's largest product, then that would significantly hurt the stock. But if you just have kind of hit piece news articles coming out on something, you have these all the time, not only with bio companies, but with Apple, with Google. They always have antitrust headlines coming out. They have they're being sued. Banks are having penalties for meddling in markets. So any large company like this, it's going to take a lot to actually affect the stock price long term. You might get a dip for a couple of days, but you really need to think about how a piece of news like that affects the fundamentals. And Stan, I'm not sure if you have any strong opinions on this, or what do you think?
I mean, nothing very strong. I chuckled in the beginning because it just seems that we as a society always look to find these shortcuts into various aspects, right? And to me, this piece of news, it didn't budge the stock very much or at all, and I'm not surprised, mainly because the company has an out from this, right? What was it? What was the intended use? Was that person diabetic and they received the that side effect, or were they trying to take a shortcut and that's why they have the side effect? So that kind of gives an out from a PR perspective to where if it did damage the stock by any means, which it did not, they could have rebutted that very, very easily. So I mean, overall though, again, I think what you guys said is pretty much on point. Any drug out there will have side effects, regardless of how meaningful or less impactful they are. I think that's just a general warning. It becomes an issue when it's a clear pattern, when it's a repetitive case, and then it escalates with time. Now, one thing to keep in mind is, this is relatively new, right? What are going to be the effects in the next, for someone taking this for 2 to 3 to 5 years, right? What does that look like? That might change something in the future. But as of right now, it's, I don't see that news impacting NVO in any significant way.
Yeah, absolutely. Great thoughts. And I think just for context, market cap of NVO is over 350 billion. It takes a lot to move that needle, and it would take quite drastic, I think, news to really significantly move that needle. But Stan, I know you trade a lot of small caps, but how does that compare to, let's say, a small cap with a market cap of, I don't know, 5 million, 10 million, suddenly coming out with news that they've partnered with someone like Novo, or they come up with their own fat loss drug of their own?
Yeah, I mean, Sam, the way I look at this, news stories and how they impact them, would a lower market cap, take a bigger hit? Maybe if there's enough of movement within the price structure itself, or within the effects of whatever the news story was. But overall, I don't really see it as much relative to the market cap, but rather is the news story relative to their business core, right? To whatever it is that they do at a core as a business, as a company. And if it's something negative, how long is that going to last? Is it easy to fix? If it's something positive, is it easy to implement? Are there a lot of resources required? I think all of that will need to be taken into account. But you take Boeing, for example, right? We had that news piece hit last week or the week before of the door falling off. And that's a mega cap company, 110, 115 billion cap. I'm not sure of the exact number, but we're seeing it today. It's about 20-25% off highs, based on that door being an issue. So, I think looking at it from that point of view of how impactful is it to the core of the business is a more realistic way to gauge, is this going to have a longer term lasting effect? Would this be impactful? And then, is it going to take a lot of resources? Is it going to shift the company's focus from continuing to move forward with their product and their plan versus now taking a step back and having to fix whatever the case was? But when it comes to, smaller market caps, I think news PRs, they definitely tend to move the stock a little bit more because of simple supply demand dynamics. It's a thinner name. There's less of it out there. It's easier if it's a smaller cap and a lesser dollar value company. It's easier for a few players to move it around. If the float is small as well. That's really what it comes down to of the supply demand dynamic within that structure.
Yeah, absolutely. No, thank you, Stan. And Judith, just throwing that question over to you then. So, how important is market cap when you're considering news?
So I think, like Stan said, I think it's all relative to how big of an impact it would have on that market cap. But necessarily, I don't think market caps alone have, a blockage on how far something can move. Like if it's a really significant piece of news, then the market will take it to where it needs to go. But I do like how Stan went with, the lower floats, the lower dollar value. Like these are targets, whether or not, the news is as impactful or less impactful. And like out there and day traders, they need a target. They need to target something. So as news and PRs come out in the morning, it's just basically about, the float, the share count, what's done in the past. And they basically just choose one or whatever it is, and that's the one that continues to go, whether or not that is impactful news, whether or not that's a high or low market cap. I think it's just all relative to that aspect of it.
Yeah, absolutely. And Chris, I'll throw it over to you, but we have to draw from this conclusion though that in terms of like Novo, if this was significant, if the news was significant and the market interpreted it as significant, considering it's 50% of its revenue comes from this drug, then we probably would see an event. So I think in effect, it's also the market just saying this is such a non-event. But how are you judging it when it comes to small caps?
Yeah, I think that it might be less about the actual size of the company and more about the shareholder base and who owns it. So if you look at a large company like NVO, if you look into the filings, you'll see it probably has 20, 30, 40, 50% institutional ownership. And you see that with a lot of large caps. You have a lot of passive indexes that hold these. And so if you have a piece of news come out on a large cap, it has to be significant enough to usually get a fund or a hedge fund or some institutional people to get out of it. And so that's kind of a good judge of, is the news meaningful? If it just has a small dip and kind of stalls out, it's usually just more of a reactionary thing, maybe some stop losses or some other things trigger. But in order for a large move to happen and for it to sustain, you usually need a fund to really exit that in a big block in a large cap. Now, in a small cap, a lot of times they don't have high institutional ownership. It's a lot of traders. So if you have more a retail shareholder base in a small company and you have a piece of news that people don't really know how to interpret when it drops, you'll have probably, maybe 30 or 40% of people might be panicking out or selling out of it. Whereas with an institutional shareholder base, it might take a lot of evidence and might be a little bit more slower moving in order for them to really dump a stock. So I think that's the difference. It's the shareholder base.
Yeah, that's a great point. And since you mentioned institutional ownership, when you're trading a small cap, how much attention are you paying to that?
Usually not a whole lot. With small caps, they tend to be so day-to-day driven that many times it's not so much about the fundamentals of a company. And so many times small caps don't even have high institutional ownership. So you can check for it. And if it's something that's been on a long run, maybe like an oil name that's really good quality small cap has been running for a while, maybe you'll have institutional ownership grow over the course of a year. And so maybe it would be a little bit more relevant in a case like that. But for these biotechs and other things that are spiking 100% in a day and then fading off 50 or 60%, it's really not a story of institutional ownership. It's more just traders using these things as a vehicle for volatility.
Yeah, great answer. And just to wrap this up, so Judah, if we don't see a market reaction to a piece of news, Stan, brought up Boeing, can we sort of correctly assume that actually it's a complete non-event if we don't see that reaction?
Yeah, so usually I don't trade specifically off the news. I trade on how it reacts to it. So if there's no reaction to it, it's pretty much like nothing happened, especially if no volume comes in, if it didn't gap up. If it did absolutely nothing, then nothing changed in my mind. And I would still be using the technicals on it. But for NVO, I mean, this stock in general for me is too slow. It's too established. It's too, like you said, the market cap is like 400 billion, and it just doesn't move enough for me. But even these small like percent moves are big to a company like that, of that size, and it takes a lot more to drop it and to lift it. And like we'd have to see more disastrous or positive news come out to really change that trend.
No, so basically, no reaction, no news. No, I like how you summed that up. And then moving on, then this week as well. And I mean, this conversation seems to come up. I don't know. It's like 3 or 4 times a month, and it seems to be hot news all of a sudden. Cannabis. So what's the story there, Chris?
Yeah, so the cannabis sector, it's had a couple of major runs in the past, and I think some people made a lot of money, and then later on they lost the money, and it kind of bled out. So it's kind of a recurring sector, especially in small caps, that will pop up once every month or once every couple months. There will be some news or something else that will kind of get some animal spirits going in them or get some people excited. The main thing with the cannabis industry, especially in the US, is that it's still federally illegal. And so a lot of times when you have these headlines coming out, they're not so much saying that it's going to be totally legalized, or it's not like a to Z kind of process. It's more, first you have to, reduce the scheduling. So moving it from a Schedule 1 drug down to a Schedule 3 or something. And that can affect states' abilities to do things with it. It can affect banking regulations. So there's a long way to go before we get from just companies are not allowed to produce it or only allowed to sell it medically to having it fully retail legal, and then that trickling into the companies who produce it and then making sure that they can actually be a real company and make money on it. And so many of these companies like Canopy, they have hundreds of millions in debt, and they're not huge companies. They might have 700 or 750 million in debt, and they have 200 million in cash, and they have a 5-year runway between when they're going to actually be doing this really profitably and when they're going to be struggling and going over red tape and hurdles. So from a fundamental perspective, it's difficult to want to hold these things for the long term. And so a lot of people just trade them, or they're waiting for the news. And if the news isn't that substantial, you get these spikes and then these sell-offs after a couple of days.
Yeah, absolutely. But obviously, I have no idea really about US in terms. I have not much of a particular interest in what actually happens with regard to the legislation. But this seems like, from looking from the outside as a British guy looking in, this seems quite big because it's also acceptance that cannabis actually might have a medical purpose, which seems like from the outside looking in, that seemed like quite a big shift in tone. But then relating that to our previous discussion, Judah, no reaction, no news.
So yeah, I mean, there hasn't been a reaction for a while now. And I want to pull up the chart here. Let me see if I could share this window. Okay. So this, for example, is Tilray. I mean, we've had some great runs in the past. 2017, as well as 2021, we had these huge runs with, plenty of opportunity to get in along the way. Well beyond like where it was already up from. So like after it's moved already 150%, it provided, another opportunity to get in here for 232%. And that's what I'm looking for cannabis themes, because every time these things have pushed, they've just got stuffed back down. I mean, I don't think it's succeeded since that run. Like, it's just been fading straight down since. And like Chris said, the cash, the debt, they continuously dilute. You have CGC here that's just like been getting hammered, doing reverse splits. And then we have ACB, which is sub 50 cents already. And I mean, there's not much here for me to take. Like, even something like this, which you think could be positive, which has a huge gap up, huge volume, it turns out to be, barely even a trade. If you do get in early enough, it could be profitable, but you want something that really grows and builds, and it hasn't been doing that in this space. And I mean, if something positive were to happen, I would want it to build first, and I don't mind missing that first leg and catching the second leg. And at the same time, like, we had OGI, and if you are like desperate, I know a lot of people like to trade cannabis names, and you want to get into one of them. And if you want, I mean, you could look through all of them and just take the best looking one. Like, you have your cannabis list, you go through them all, and you see which one is setting up the best. And you could just take that one. Like, you don't need to take 5 of them. If you take 5 of them, you think your risk is better because you're separating and diversifying. But if one of these go down, pretty much all of them are going to go down. So you're better off just taking the best one. And if it works out, it does. If not, you stop out. But at least you're not in like 5 of these positions where it's like constantly failed every time. Like, none of these looked good going into this event, and none of them really even reacted on them. I mean, MSOS was the only one, but even this, like, there's not much here. And they're really, as big as this may have seemed to some people, I don't think it was as positive. And Tilray was another one that actually looked pretty good here, but then they announced earnings this day, and it like completely whipsawed and failed. So that was broken. But for me to take cannabis in the future, it would really need to build and grow like it did back in 2021.
Mm-hmm. No, that makes a lot of sense. And Stan, any interest in any of the cannabis stocks?
Yeah, I mean, I've traded them plenty. I think they're great vehicles. If you're able to participate once they're in play. But similar to what Chris and Judah mentioned, the way I feel about them is they're going to be a speculator's dream until there's some sort of legislation change, right? Until there's some sort of definitive answer, yes or no, one way or another. They're going to continue to be this vehicle where every 6-12 months they rally the troops and they get some sort of a news event out there, and here we are going up for legislation. And the thing is, everybody knows, right? Everybody knows that once and whenever, if in the future it gets federally approved, then it's going to be a big thing, right? So nobody wants to miss the dip. Nobody wants to miss being early. But in a way, that creates the liquidity for all of this to continue to happen over and over and over again. So do I trade them? Sure, I participate in them, but as of right now, to me, they're just a vehicle. There's nothing that I'm willing to sink teeth in long term until I see something more of concrete. And I think the more they do these cycles of excitement and then disappointment, the more it desensitizes people to where when the true move comes, it's going to be aggressive and fast because everyone's going to miss it. I mean, that's kind of what causes moves to be so aggressive and fast, is because everybody missed it, right? So that's really my take on it. Again, I think until that point, it's just a speculator's dream. Great vehicles to trade long or short, whatever your preference is, whatever you're most comfortable in. But again, as far as a growth perspective, as far as viewing them from an investor lens, that's not for me yet.
Yeah, fair enough. So far, they're just a good example in what happens when the dip keeps dipping. That's what it seems like. Or when they just keep diluting. I think quite a few of them with that run that Judah just pointed out, I think it was a couple of months ago, I think a lot of them used that time fairly wide to raise some capital.
Side note, but also Stan is more of a bourbon guy than a cannabis guy. When we were at Traders for a Cause, we were at the same poker table, and there was like a 15-minute break or something, and Stan comes back with an old-fashioned, and he already had an old-fashioned at his table, and so he looked at my chip count and said that you need this more than I do. So that was how we first met, and that's how he gave me an old-fashioned.
Yeah, that's a great story. So tonight we've already covered Novo Nordisk, we covered cannabis, and I mean, we just sort of, like I said, we cover absolutely everything on this show. And Chris, you spotted a pretty good trend.
Yeah, so this has been one that I've been watching for a really long time. It's the uranium trend. So this has probably been mentioned here or there over the years, but there's like a whole backstory with this commodity, with the stocks, and why it has like such a cult following. So I'm going to screen share and pull up the spot uranium chart. If you could share that, Sam.
There you go.
So this is the price of spot uranium. So uranium's a commodity, and commodities trade on the spot market. And uranium's a very niche commodity, and so a lot of times it's not even traded on the normal kind of spot markets that like copper or gold would be on, but it's on like small exchanges where you have the bid and the ask. The bid is like a utility that's buying it, and then the ask is a fund or someone, a producer who's selling it. So it's a very niche commodity. Now this commodity runs in very long cycles. So this had a huge cycle back in like the 1950s. It ran again, I think, in the 1970s, and then it ran again in the early 2000s. And this is known for having huge booms and busts. And the reason is that it's traded on long-term contracts. So with a normal commodity like oil or copper, you usually have a pretty fairly liquid spot market. With uranium, you have it traded over a 5-year contract because utilities will buy it and they'll kind of want that production locked in. So what happened is that the spot price got so low for 10 years or so that a lot of companies stopped producing it. There was a big, kind of fight against nuclear power. There was the Fukushima incident. There was some nuclear meltdowns, and uranium, once it's enriched, becomes the fuel for nuclear reactors. So there was this whole like fight against nuclear power, uranium, for like the last decade or 15 years. And then over the last 5 years, that started to come back. And so uranium or nuclear power is a great source of baseload carbon-free energy. It already produces about 18% of the baseload clean energy, or of the baseload energy in the United States. So it's a huge market. So all of that to say that uranium is very important, and now the spot price is finally catching up with the fundamentals of it because it's been out of whack for so long. So you have a huge move in a commodity like that, and that can spark a sector. And so the next chart that I'm going to pull up is going to be CCJ, which is one of the main producers of uranium. You see that?
You got it.
Okay.
Yep.
So if you compare the spot price of uranium, you can see how it's clearly a ship that's taking off, and then CCJ or a company like that is an anchor that's dragged behind it because the sectors are correlated. Now, if you notice, it's only really the large companies that have reacted so far, and CCJ is one of the only big ones on the market. The rest of the uranium companies are either very small producers, or they might be development companies who have a uranium deposit somewhere, or they might be exploration uranium companies looking for a deposit. And so you have this giant disconnect between the uranium stocks and the spot price, which I think that divergence will start to close if the spot price keeps going crazy. And I think this is a good example of how a different market can have different results. So if you had something like this going on in 2021, you would have had, the stocks up 10x by now, but you're in 2024. There's more pockets of speculation. And I think that this is one to keep an eye on, though, because you usually, with a sector move, you'll see the biggest and the best move first, and then eventually it'll start to move down the food chain into the smaller names. So I'm definitely watching uranium.
Great thoughts. And perhaps, not everyone draws a link between uranium and nuclear power, because I think if that was a more widely accepted association then, or what more widely known, I think perhaps we might see that catch up quicker. Judy, you also noticed this trend. How did you find it?
Yeah, so like Chris was saying, CCJ was leading that that run. We had the URNM ETF, which started to really move out of this trend on this day here. And we have a few days of that run. It's taking out the all-time highs, and CCJ as well. I mean, you have this pivot over here. It's moving towards the highs. And by this day here, it's already day 4 for uranium and CCJ. Like Chris said, the main, the main uranium runner. And the other ones, I mean, UEC, it appears like this was day 1. So while this was gapping on day 1, these were already like on their 4th and 5th day of a move. So CCJ and URNM, they were too slow for me. I didn't get involved. And then once these other ones started to gap up, seeing that URNM and CCJ were already ahead, I didn't take any of them. But I mean, I will look for an entry if they do set up. But even in the past, I mean, they do look really good in terms of like as an investor perspective. Like they're at the highs, but they've kind of been choppy. Like until I guess around here, most of the time for these names have been in chop, and I mean it doesn't really offer some great trends in this sector. I mean LEU is probably the nicest one. It's that has had a breakout in trend, but if that changes off this this gap up that we've had, I'll definitely look for a move there. But based on its past, I mean it's been tough to trade because of how like choppy these grinds are.
Mm-hmm. And just to touch on, so perhaps if you have an associated uranium with nuclear power, how are you establishing that there's potentially a sector theme emerging here?
So usually, I mean, I had no idea about everything Chris does on this topic, but I did
you and me both.
brewing through the URNM ETF, and that's one way. Like MSOS is an ETF. You could use these ETFs like the semiconductor ETF and these industry ETFs to see what things are doing, and then go within that and take it a step further and go see what stocks are in there. And you basically look at the ETF to determine which stocks could potentially continue breaking out, which happened to have been URNM at the time.
Yeah, absolutely. And it's really similar to the conversation last week when we were talking about Bitcoin, Riot, Mara, etc. Stan, any thoughts on uranium?
Yeah, I mean, for me, Sam, what the only thoughts that I have on it, nothing specific to any particular ticker there, but what I'm on the lookout for right now is what is going to be the next catalyst for the next bull run, right? Obviously, these past 10, 11 years, we've had technology, right? It was really the tech sector that took us from 2008, 9, and up and up higher. Sometime in 2021 or even before then, but it didn't really become apparent until later on. And very much so in 2021, 2022, we had the AI theme. Maybe that was going to be it. The next catalyst. So now the way I look at this sector move is, do we see energy, essentially the energy industry being that disruptor, being that next catalyst that will carry the bull market on its shoulders. So that's really the macro view that I have on the uranium. I mean, I'm not involved in it in any way on the day-to-day or any of that, but I do keep an eye on various ETFs, and just like Judah mentioned, it's a great way to kind of see what's encompassed on that, inside that sector, because that's essentially what an index or an ETF is, right? You have this compilation of various tickers that aggregate, and then they're able to move. And the ETF is just that one vehicle that's offered to investors, and unless they're if they're unsure where they want to put their money, they're like, what, I want a little bit of exposure of everything, so I'm just going to get this. But it's a great way to reverse engineer and then find the leaders within that sector, and then anchor to them and then go work your way backwards, because within a sector move you generally have this one evident strong leader that carries everything on its shoulders, and then you have the followers behind it, which follow, maybe not to the same extension or expansion, but they're kind of tiered in a way. So that's it will be interesting for me to watch and learn a little bit more about it and see what the future holds for it. But right now I'm just a speculator on the side.
Yeah, and that's a great point that you just made. And Chris, on that, how are you deciding? Do you have set criteria whether you're investing in, say, an ETF or whether an individual company?
Yeah, it depends on the sector that you're going after, because the whole idea of that's a lot of what my style is. It's anchored speculation. So I try to find something that's running, the price of uranium, the price of gold, the price of Bitcoin, something like that. And then I look for the things that will follow that. And I've really done that over multi-months or, long swing trades. Over the last couple of years, you haven't really had that many of these, and it's been very frustrating. So I've been more day trading. I've changed my style, and luckily I have a couple of tools that I can kind of go to when the market changes. But as far as when a sector is running, what is the optimal vehicle to play it? You usually want to look at things that have the most volume, the best fundamentals, and if possible, options on it. And so the reason for that is that if it's a theme or a sector that actually starts to run at the beginning, if you have any actual funds or institutional investors getting into it, they need to get into something that they can size into, something that they could hedge, something with the best fundamentals. If they want to have it on their books, then they need a reason to have that. It's a little bit different than a retail trader who can just buy whatever. They need to be able to justify their positions. So usually that's what to look for in the market leader. Best fundamentals, best volume, usually best technicals, usually has options on it. Now, if you go down the food chain, then you'll usually have the smaller companies, and they might have some fundamentals. They might need some money. So, they might lag a little bit. And then below that, you'll have companies with just the theme name. So we saw that with AI. Let's take NVIDIA, for example. You have the biggest name, the strongest fundamentals, options on it, good technicals, everything about it, great growth. So a fund or anything can get into that. And then you kind of had it trickle down the food chain to a lot of the other chip names. And then if you remember sometime in 2023, that's when you had the BBAI, SOUN, MRAI. You have anything that has the stock AI, that was the ticker of it, and that's why it ran. So if you have these stocks that just have the name of the theme into it, that's usually when that money is really rushing in there, and sometimes that can be the end of a sector. But what we've seen more recently in recent years is a big split, whereas the small cap market and the large cap market trade totally differently. And so you can have the end to the small cap market, and the large cap market can keep going.
Yeah, I'm pretty sure there's a biotech which had AI in it, and I think it still ran, you know, a few 100%.
The XAI was like the biggest runner, I think, of them all. And it's funny because you see these get hit first. This is like the beginning of that wave, and then people realize like what AI is, and then they decide to do more research because they want a bigger hold for this. They want to hold and be in for the long run. And most of the time, these small cap stocks aren't there for the long run. So you get that initial move of like all these stocks, and people do the research, and then they bail. And that's why we're seeing like that happen then, and then we see Nvidia where it is now at the highs versus a lot of these other stocks pretty much back where they were before the run.
Yeah, and I mean, you know, I think that's just like a similar example. You know, when we had the oil theme back in 2022, I believe, right, early 2022 during the war talks. I mean, you had this one ticker, GBR, that went crazy, but you look into their filings and they weren't even in the energy business anymore, or the oil. You know, they sold that leg off in 2020, but because they had the appropriate name, you know, they got a piece of that pie as well.
Yeah, people go back to what they're familiar with.
Right, exactly, and you know, I think this is I'm just going to mention a quick point here, Sam. You know, I also tend to separate, you know, some of my, not necessarily trades, but the way I would look at risk on various setups, right? So, you know, if you have a say like a sector move, right? You know, and we just spoke about cannabis. You know, I mean, within that sector, right, you know, you have that catalyst, which could be the legislation or whatever the catalyst is. Now that's going to, you know, move the sector until that decision point, right? And then, you know, we also have theme moves, right? If you look at in 2022 and since then, you know, we had the AI theme. Now, theme moves, you know, for me, they could actually incorporate or encompass multiple sectors, right? You know, they could bleed over to other things. And just like we saw with AI, obviously the majority and predominantly it was in the tech, you know, sector industry. But then you had, you know, companies from biopharmas to agriculture to education. I mean, everything essentially started, you know, moving with that theme. And then, you know, most recently, the other category that I call it is grouping, right? And, you know, if you look at what we had just this week, DWAC, PHUN, MARK, DATS, right? That was more of a grouping move. And the way I view grouping move is, you know, that's usually ones that last the least. They don't last very long at all, because the relationship between that is nothing more than memory. You know, people look back and they remember back in 2021 December, you know, DWAC ran, and then PHUN ran, and then MARK ran. But what was truly the fundamental connection there? You know, not much, nothing significant at least. So when I look to get into trades, you know, that I look to define and place them into, you know, hey, is this part of a theme, right? Is this part of a sector move? Is this part of a grouping? Because then that will define the longevity. That will define, you know, is this something that I'm willing to fight, or am I on day one out of a 100-day move, or am I on day 3 out of a 5-day move? You know, so I just wanted to throw in that perspective there, in separating some of these sectors / themes / groupings that happen with various tickers.
And that's such a perfect segue. It's almost like you knew we were going to move on and talk about DWAC and PHUN. So this week, well, you guys, you're the Americans, so you can tell me. So I understand that all of this was off the back of Trump winning Iowa for the with the Republican nomination for the presidency. Then all of a sudden we saw PHUN run, and we just had that, you know, and you talk about this, Chris, all the time in terms of anchors. We had Trump and he was pulling along DWAC, PHUN, etc.
Yeah, and I think that Stan just laid it out perfectly, because there's such a scale of how themes and sectors and what Stan calls groupings, which is a great term for that. It's such a spectrum of how these different things move. So if you contrast something like the uranium sector, which is a multi-year move, versus something like the DWAC run, which is based off of a headline, you know, whatever it is, Tuesday, and it's forgotten by Friday. And so it's a much shorter thing. So I think understanding how different themes and sectors can move together, but you can judge the duration and the sustainability of them based on what was the catalyst, what are the fundamentals behind it, and just experiencing a lot of these cycles over and over again. But Stan really nailed it.
Yeah, but in terms of like PHUN, for example, a couple of days ago, Judah, what was it, like 1.5 billion volume, which is, I mean, in terms of dollar volume, it's not a great amount, but in terms of volume, that's insane.
Yeah, so it did have the most volume on a volume basis, but on this day here, the price was much larger, and although the volume itself was lower, I believe it had more dollar volume that went into that. So on a dollar scale, which is at the end of the day the most important aspect of volume, it had a lot more volume back there. And like everyone was focused about how much volume it has here, but the thing was 8 cents, and it, you know, 8, 20, 30 cents. It's small numbers compared to like what it was back here. And yeah, I mean, Stan nailed it. Group moves like this is like technically no more. This was no more than a pump and dump. I mean, if you look at it, it's never had that hold. Like every time it moved, it just sold back off. And this was something that I didn't want to get involved in. Its history isn't so great. I mean, you could see all these wicks, all these sell-offs. Every time it tries to move, comes back down. And something like this, a few cents could mean 15, 20, 30%. So like, where is your proper risk on it? Like you literally need to risk, let's say, a penny at a certain time, even if it sets up proper. But like, I'm sure there was tons of like people stopping out, and at the end of the day, they needed cash. It was nothing more than random, and you know, they ended up raising, and it pretty much gave back like almost that whole move. Same with Mark.
They were prepared, like straight away after hours.
Like this is what you want to trade. If you're going to trade some of it, go for the main one. I mean, why would you trade, even though it could offer more? The risk, like if you held this to after hours expecting that after hours run, it was very hard to get out during that offering. And at the end of the day, it was moving off of DWAC and off of Trump. So why not just go for something like this, you know, something that's pretty much in this range, and, you know, gapping up on this volume like this actually did something more. And like the fun, it was absolutely no interest to me.
I feel personal attack there, Judah. Actually, I traded PHUN and I did not trade
What side? Which side though?
Sure.
Right. So that's, sorry, I was speaking specifically long side.
Mm-hmm.
But short side, yeah, I mean, it could be a wonderful opportunity because, like we said, it's nothing more than a random push on the stock, and obviously, you know, like random agenda based. And like I said, it was known to not hold their moves properly. So if I shorted, yes, I would be looking only on the short side. But since I'm a long trader, I had no interest in taking fun whatsoever on that long side.
But it's certainly interesting how prepared they were, because I'm pretty sure we had the trifecta, because we had DATS running, we had MRAK running, we had PHUN running. Obviously, they were pretty happy with how things were, so happy that they diluted as soon as they possibly could. And all three of them, I think, within minutes of the market closing.
They know what it is. They know exactly what it is. They know that it's not going to hold. They know that it's went from 8 cents to 46 cents. And it's like, they may not get this opportunity ever again. Right. So they took it as soon as they can.
And I think with companies like that, I mean, you you offer when you can, not when you need to, because you don't know when that next opportunity will be.
I mean, if you're the CEO of that company and you suddenly wake up and you're absolutely churning hundreds of millions of volume, you've got to be pretty excited, right, Chris?
Yeah, and I think that's a good kind of point to make, is just with most of these small caps, they're completely valueless. They don't do anything. They're just a vehicle, a public vehicle, and every now and again the CEO will be able to raise some money, and then the management team gets paid basically from the money that they get raised over the next couple of months or a couple of years, and then you'll have another news event set it off. They'll spike again, they'll raise again, because that's the cycle of most small caps. There are some small caps that have great fundamentals, that are real companies, that the management is great, but so many of these are just, I mean, they solely exist to raise money, to pay management, to keep it going, and that's the entire point of those companies.
I'm glad you just issued that disclaimer that it's not all small caps before we get attacked by everyone that's invested in a small cap.
No,
they're not all dilutive machines.
No, definitely not. And I've traded a lot of my career was on really good small caps with great fundamentals, with good management, that weren't just dilution machines. So there are incredible companies that need access to capital markets that are growing, and those are legit and they're real. But it's up to the investor or the trader to basically differentiate between something that is basically a walking zombie company, or something that actually has some prospects that might get uplisted from an OTC to a major exchange, has some good, revenue, cash, everything else. So there's definitely a difference.
Yeah, and there are some incredible associations out there. I just remember, like, every time eyes would run, ears would run as well, even though they are completely, there's no correlation there at all. But Chris, you've touched really strongly on fundamentals. When you're weighing like an association like these companies have with Trump, and it's extremely loose and tenuous, do you put any weighting behind that, or is that just a complete avoid in this circumstance?
Usually not. Companies in general, like when you're looking at fundamentals or anything like that, the fundamentals, it's very similar when you're looking at a person as when you're looking at a company. So what's the net worth? What's the income? What are their prospects? Are they getting better and better over time? And it's the same with a company. Does this have a sustainable revenue source? Are they able to have margins on that? Are they able to turn that into cash, to reinvest it, to grow? And so it's very similar to that calculation of looking at net worth, of looking at earnings, looking at growth, looking at future prospects, and then the quality of the management. And the management of a company is basically like the brain of a person, and they're the ones who make all the decisions. They're the ones who tell it to walk and do all that. So when I'm looking at fundamentals, I might take a glance if there's a news catalyst that says something off, but 80% of the time or 90% of the time, I assume that there's no fundamentals. But if there's a sector running, or if there's something where I think that a company has unusually good prospects, then I'll definitely look into that, and I'll read the 10Ks, the 10Qs, and really dive into the financials.
And Judah, how does that differ, or is that the same as your style? You mentioned then that DWAC potentially had a good technical setup.
Yeah, so I mean, in terms of it moving off Trump, which is related to DWAC, not off PHUN and the others. So if you're going to take one, you want to take the main one. Like, for example, back when we were speaking about the cannabis, it's like either taking the best one or two setups, and this goes with Bitcoin also. You take the one or two best setups and you ride with those. A lot of people like to, take the whole basket because they have so much conviction in that theme sector group. And at the end of the day, if you're putting 20% of your portfolio in each of those, essentially putting your 100% in one common theme. And on a risk reward level, that's obviously very risky. Mm-hmm. So if it were to me, especially something like this, I would only go with DWAC, not the others. But I mean, after day one, things can change. Like PHUN had the offering. I don't know, maybe they could offer again if they want soon. But at this point, it just becomes a liquidity trap, or, shorts getting squeezed out because of how quick it dropped down. And it can, over the next few days, week, like actually put in a setup. So although I avoided it day one, I probably won't take it in the future. But if it does like provide a short-term opportunity, then I would take it. But that would take time. Like if you look at it on an hourly level, for example, like, you know, we have like this sort of consolidation here, which like you don't need that much for these pennies. I mean, the way it moves is like there's this, let's say you want to use this level here and you buy it at 27, like this alone is already 11-15%. So generally I'm uninterested, but I mean, if it does decide to fill this gap, it's a 30% move. So like things change after day one, after you get a good sense of what's going to happen with it. Because even though, like we said, it's a random pump and dump, if it doesn't fail, that's something to note, both on the long side and short side. Like you don't want to be stubborn and stay short because you think you're smarter than the market, and you don't want to stay long on something that's failing because again, you think you're smarter than the market. So I don't like to judge too much. I just like to take price action and charts and go with it that way. But I mean, I doubt I take it in the future. But yeah, DWAC, that was the target. These other ones were just little minions following it. And I mean, if I was going for one, it would have been DWAC. But I passed on that whole sector, that whole group.
And you raised a couple of points there, and one I particularly want to pick up on is last week, Chris, you spoke about like small caps being gamified, and we basically had PHUN, which was an extremely beaten up chart, pretty much at lows, 8 cents. I don't really think it's that surprising actually that it ran several hundreds of percent.
No, and especially so I would differentiate a little bit between like a gamified tape, like a one of those liquidation plays, and something like this that can run up 400%. So a gamified tape to me is something where someone owns 70 or 80% of the float, and they are basically the ones in there trading it. And so they can do whatever they want with the price. And then sometimes they'll flush it down, bring it back, trap in shorts, and then have an eventual exit. And then they'll go from owning 70% of the float down to owning 10% of the float because they're just going to, drop it. But if you have something like PHUN, I think that's more of just a structural issue where there's a lot of money floating around in the small cap market, and you have something that's beaten down, something that people remember ran in the past. And the market caps of these things, sometimes they're $5 million now. And so if you have $25 million of speculative capital all funnel into one name that is worth $5 or $10 million, it's not surprising at all to see it run up 300, 400, 500% in a day.
Great points. And Stan, I don't know if you have any thoughts on this week's activities, PHUN, DWAC?
Yeah, I mean, just to touch real quick, back to the fundamental aspect and looking at their books. It's something that I consider, but I'm a primarily price action / tape driven type of trader. I look at the fundamentals. They're a nice to have. They're a good consideration, but ultimately, it's about what are we doing today at this very moment, and is there some sort of an agenda that I can extrapolate based out of this price action? Even though I was trading on the short side, PHUN, unfortunately, I did not catch the offering. I caught a little piece of it delayed, but I don't think there was a way that you could have predicted that. You could have seen that coming. Past experiences or not, it's just it's something that trading the price action and responding to the dynamic variables is the right approach for me when it comes to whether it's these small caps or the gamified tape. And to Chris's point, I do consider this a little different than a gamified tape simply because of the sheer volume. You're not going to have 1-2 players in there messing around with the price action, where something that's trading 50 million shares and it's 800,000 float, then yeah, you could have 1-2 big players that are just having fun all day. But I don't think that was the case with PHUN. I think that was simply they saw an opportunity. The news was there. DWAC ran, and I think it was known. Everybody, it was fresh in everyone's minds. This is what ran end of 21. This is more likely than run. Self-fulfilling prophecy. The opportunity was seized. The offering came, and now just business back to usual.
Yeah, and one thing though, I would say, like, perhaps a bit of a but for me in terms of what helped me for my thesis that morning was, since we're so beaten up on the daily, I was just thinking, if you think about anyone who's holding from $2, $3, whatever, and it's at 8 cents, they're not 100% to them, 16 cents doesn't bail them out. I mean, they're not probably never gonna, I don't want to throw shade at anyone if they are bag holding PHUN, we've all been there. You may never get bailed out of that position. So again, in terms of float, it's has a high float, but in terms of how much is actually being traded, I don't know. And that's perhaps not a question that we can probably debate all night. And then, in the interest of time, I will move the conversation on. But one last point on this sector, and obviously the link with Trump seemed extremely tenuous, but in terms of, it's an election year, right, in the US. So we could actually see, this could just be the start, potentially.
Yeah, I think that you'll see when these groupings or these news events come out, especially if there's like an ongoing theme, like an election year or something, then you're more likely to have multiple catalysts. So you'll have every few months, something will happen, they'll run up again, and then they'll taper off. But usually what I notice is that the first catalyst is the strongest, unless there's an actual fundamental change. So the first catalyst is usually the strongest. And then, so let's say that there was news about Trump, these stocks ran up, 50%, 100%, 200%. The next time a headline like that goes out, then they might run up 25% and 100%. And then the next time, 10% and 20% or something. And it's because that when, like you were just saying, after something's been so beaten down, there's no sellers left really in the tape. But after you have these events happen again and again, you'll have bag holders and other people who are just looking to get out. And so you start to have a buildup of basically shares that want to get out, and that will dampen the moves as time goes on.
Mm-hmm. And that's at lower prices too, because now there's a lot of these guys that are in from 30 cents and 20 cents instead of having it, from the dollar range months or weeks ago. So like he said, it just adds all that pressure.
Yeah, and just one more point on that. So if you look at a trading setup like failed follow through, where something has a big run up, it kind of consolidates, it slams down, comes back up, and then it can't break that and it continues to go down. If you look on a very broad time frame of like why that works and where you can see that in other instances, is you could have an entire sector or a theme like this where the first move, that was like the initial run up, and then you had consolidation, and then there's overhead inventory. And so the next time that sector tries to run, it's just like failed follow through, where there's sellers up there now. And so it tries to go again, but it gets stuffed down, and it keeps stair stepping lower each time that catalyst comes out. So the failed follow through concept is there of basically ratcheting up inventory at different levels. And then you have to work through all those levels of inventory in order to break new highs.
Yeah, that's a great point. And it just reminded me, like, some of the most explosive moves that we've seen, and we did touch on this last week, have just been some of these really beaten down charts that all of a sudden run. And I'm trying to think, was it TPST that was the one we spoke about last week, which was what, like 1,000% intraday? I think one of the biggest moves ever. But in the interest of time, so we've covered lots. And lastly, within this segment, I don't know. You tell me how big this story is in the US. So, Spirit Airlines were basically going to be taken over by JetBlue. A judge blocked that. Obviously, we saw from that reaction was huge. The reaction was huge. So, what are your thoughts on that before we chat about Portnoy? Go on, take it away, Judah.
No, so I think it's a very big industry. You have a lot of flight attendants, you have a lot of pilots. It's not that easy to just lay off and give up a company like that in this space. And I mean, I don't know much beyond that or even anything at all within this specific space. But I mean, it's not just a general space that could easily go. I mean, the flighting world and airplanes is such it's an insane concept. If you think, like, I think about it every time I get into a plane, every time I fly, like, we're in the air right now. Like, you have people that could drive it, people that could make you feel comfortable. It's not just easy to go from like a great company or a company to zero. And, JetBlue was going to merge with them. That got blocked. And the stock just fell right through.
Mm-hmm.
Yeah, and I think this is it's for me, every time it comes to either some sort of a merger or some sort of an acquisition, or a takeover or a buyout, whatever the case may be, I always try to read the message between the lines of how the stock reacts based on the outcome, or if there's news like the judge blocking it, or if all of a sudden the merger failed for one reason, right? So to me, what this says is there might be some underlying problems there, preventing this specific deal from going through. And in the future, if there isn't any sort of restructuring, if there isn't any sort of additional party being interested at different terms, perhaps, that are more favorable for them to pass, that could speak volumes, and it could speak trouble for the company in the spotlight. But I had no trades in SAEV this week. For me, I think the closest one, that just the price action itself and the halt downs and the way it dips and then it rips, it reminded me of the banking situation that we had. Obviously very different, just more so talking about the price movement of that particular ticker. So if I were to take that, it would be based on that past experience versus the fundamental reason behind it.
Yeah, I mean, I took it as a trade. I just saw it as it went from nearly 16 down to 650. I just thought we'd get a nice reaction off of that bottom potentially, and it happened to work. Chris, did you trade it?
I didn't. I was watching it, but I think that SAVE is a good example of that kind of price action. When something drops that dramatically, most of the time that's from something like a fund getting out. And so if a hedge fund were in that because of the merger, and suddenly they get notice that merger is not going through, they're going to be out as soon as possible. And you could have 5 million shares hit the tape basically and drop something 50%, especially in a case like that. So I think that's just something to note, that if you have something with some institutional ownership, you can have those kinds of drops on news. So yeah, that was pretty rough. Spirit might not have been using Boeing planes, but certainly the doors flew off on that one.
No, nice. Look, I'm gonna say we're going to turn into the airline show at this rate. It just seems to be a common theme that's emerging. And then today, Dave Portnoy announced that he was saving Save, and then literally moments after tweeting, the stock just crashed. Was it around 50%?
22%.
22%? Literally just as he tweeted, and it was based off of news that they might be restructuring. So it sounds like they might be in trouble. So what do you make of that? I mean, Dave Portnoy a few years ago he was just incredible. And I think what did he say? Like, stocks only go up, and it was just like an absolutely brilliant time. 2020. Yeah, do you want to take it away?
Yeah. No, so I mean, let me pull up the chart here. Yes, I believe he tweeted like about here, and then it just absolutely got demolished from that point. And from the lows, I mean, this thing is up 45%, but like he's probably only up 10. And I mean, I wasn't prepared for this drop, but it definitely was a great mean reversion type of trade. I mean, this thing was, like you said, 1550s just 3 days ago, and then we dropped 75% in 3 days, and this alone within the one day of moving down 23% just adds to that factor. You know, we're not grinding lower. We're gapping down constantly. And if you move on to a bigger time frame, this is that V that Lance talks about, where, you know, this thing comes all the way down 75%, and then it starts to come back up. And I mean, you could have took it here as it broke this previous low candle, and I mean, from the top to the low, if you were going to take that, it was 14%. So you would have had to adjust your risk and put in less shares, or you could have used a different type of stop. But I mean, it wasn't so easy to say where you would have stopped out. So low of day probably would have been it, but by the time I noticed it, it was like 15% away, and it wasn't worth it for me. But I mean, if this thing starts to grind up tomorrow or continue, it doesn't need to be a one-day bounce and then fail lower. It definitely can, but it could, you know, it could come back up. So we'll see what it does tomorrow.
Yeah, it's certainly an interesting one, and to be honest, I just love having Portnoy back. To be honest, like I just think he's just, as soon as he starts tweeting, it's just absolutely brilliant. Like and all of a sudden, all the memes, the gifs. I mean, it's just brilliant, and it just brings back such a good time. I think. Stan, did you trade Save today, or did you pay any attention to it?
No, actually, I did not bother with Save at all. I think, you know, I mean, my thoughts on his tweet, and then seconds later.
Sorry, am I putting you off?
No, not at all. No, yeah, I was just laughing at it. Yeah.
I mean, it's just absolutely amazing.
Right. I mean, you know, I love the spirit that he has about it. No pun intended. But my thoughts on you know, him tweeting and then seconds later just dropping is, you know, I mean, he could have been seen as a liquidity, right? He could have been seen as, you know, somebody else needed to get out real quick. That could have been a reason. Nobody truly knows why it happened, but you know, you can start to put pieces together eventually. But overall, I think, you know, had I been watching it and if I was focused on it, I think there was definitely a good opportunity for the long side. You know, it's something to where, and I touch on this concept often, is, you know, does risk make sense? And you know, having such a drastic drop within seconds and minutes, yeah, you know, risk at this point would make sense because markets tend to overreact initially, and then as you know, that clarity moment hits, everyone's like, oh, okay, maybe it wasn't that bad, you know. And then you see it slowly start to recover the price. So, but no trades for me on it at all during this whole debacle with the judge blocking or today's action.
Yeah, great thoughts. And Dave, if you're watching, it's absolutely great to have you back, and you're more than welcome to join us on this show at absolutely any time. So moving on, we also wanted to chat about aha moments within our trading. And Stan, since you are guest tonight, and I mean, you may just say there have been no aha moments, but have there been any for you?
I mean, I think my entire journey is aha moments all throughout, right? No, absolutely, Sam. You know, and I think, you know, thinking back to the I have two very impactful aha moments. And I remember them, you know, I can't tell you exactly when they happened, but if I'm able to pull my P&L curve over the last, you know, 8 to 10 years, I can pinpoint exactly where they happened on that. You know, and you know, the first one is when it comes to trading, you know, when it comes to entering in a position, if I cannot visualize my exit, if I cannot extrapolate my exit, I don't have a trade. I don't even have an entry. That's the first thing that comes to mind every time I look at a ticker, is if I can't see my exit, I don't have an entry, because I can manipulate my entry with size. If I don't get a favorable average or whatever the case is, I can manipulate that with size. But if I don't see my entry, I'm not prepared enough. I don't know enough. There's information missing. There's a piece missing. There's a variable that's outside of my control that simply forces me to stay out of the position. So really understanding that is something that, alone has shifted my trading tremendously. It has kept me safe throughout the years in many, many occasions. It doesn't matter what percentage it has gapped. It doesn't matter how extended the chart may look. It doesn't matter that we're up 500% in the day. If I don't see an exit, I don't have an entry. And my second one, second aha moment, and as cliche as that may sound, is essentially the market is always right. And I'm sure everyone has heard that, but understanding it, is a different factor. And to me, the market is always right mainly helps me with my emotional aspect when it comes to trading. Because I already know I'm at disadvantage in this playing field, right? There's someone out there, player, I already know that I don't have the same market acumen as some players out there. I don't have the same capital. I don't have the same tools and resources, et cetera, et cetera. So then if I get into something and it does not do what I have expected, why fight it, right? Why be in there at all? And it's something that, to put a theoretical example, right? Say you take Apple, we're at 180, 187, $188 today. Obviously the 200 level is pretty clear. It's been digesting there for months. It's been setting up. Let's say they come out with a catalyst of, they're inventing a new product that's going to bring 5x revenue next year. And then it breaks to new highs. It breaks over that 200 resistance. And it's a picture perfect long setup. But that same day, Warren Buffett wakes up on the wrong side of the bed and he says, you know what? Ditch all my Apple stock. I don't care how good that long setup is. I don't care how good that catalyst is. You're not catching a bounce that day. Guaranteed. Right? And this goes to the point of the market is always right. If I'm in there and if it's not what I'm expecting, why fight it? Those have been my two biggest aha moments that have shifted my trading tremendously.
They're great moments, and definitely not good to pick a fight with Warren Buffett, even if he is in his 90s. And I think, for me, it's interesting because I think aha moments, I think they can be something quite silly and something quite, perhaps even just like a subtle comment from someone. And I've got a lot of influences, the people that have sort of mentored me or just given me a lot of good advice. The usual names spring to mind, like Nate and Brian Lee. They've all been huge influences. A guy I work with all the time, Mike King. He probably won't thank me for mentioning his name, but they're massively influential over me. And then there are perhaps people that I've listened to over the years. And one that always stands out to me as an aha moment was Chat with Traders interview with Stan Glusman, who's a prop trader at 7 Points. And he just I think he might have even just been a passing comment, but it still stands out to me. I can even remember being in the car listening to it. And he just says something subtle about just when he's short, he just only shorts a red candle. And as soon as I just listened to that advice, even though it's something so simple, all of a sudden my executions and my charts just changed overnight. And I mean, I was trying to do all sorts before in terms of like, you know, finding tops and things like that. And just some simple advice like that, I think just, you know, absolutely changed my trading. And I just remember actually, like, after that, I was sharing charts quite a lot on Twitter at the time. I just remember being DM'd like, hey, what happened? Your charts are improving a lot. So, I mean, they must have been pretty terrible before, but it's good to get some feedback. So, Chris, what about you?
I mean, there's so many, like Stan mentioned, but for me, once I started thinking about price and, you know, vehicles in terms of just supply and demand and all of these other things that, you know, we talk about, they're kind of like secondary things that influence supply and demand. So like a stock itself doesn't do anything, price itself doesn't really do anything. It's the result of the interaction between supply and demand, and just really hammering that in, and kind of like, for me, it helps to visualize supply and demand. So, you know, if you have price in the middle here, it's like you have layers of demand underneath it and you have layers of supply above it. And just thinking about are people joining into those layers? It's like a cake. Like, is there new layers being added? News comes out, is okay, someone else is in there now. There's a new layer, a fund gets in there. Or in the case of supply, did something bad happen? So now someone is looking to sell. And so just really visualizing the layers of supply and demand, and thinking about things as just vehicles, and that price can do unbelievable things. Like even now, I'm almost never surprised at any price move. Something could be up, you know, 4,300% in, you know, 2 or 3 candles. And I'm just not surprised at all, because if you get supply and demand out of whack enough, and if you get a structure that's odd enough, you can have price do literally anything. And it's not really that surprising. And that's part of the reason why I don't do certain things. I don't short, for example. I'm just not comfortable with that kind of tail risk. And so I go long equity. And then if I want to go long or short, or play downside, then I use put options or something where my risk is capped. So just thinking about supply and demand, and then just not being surprised by any kind of price action. Those were aha moments for me.
Yeah, I think that should be one of my takeaways as well, is stop being surprised, because the surprising stuff just happens all the time. Judah, what about you?
Yeah, so because I'm a more, you know, longer time frame trader, or I try to capture bigger moves, it's a very simple one, but it's like, you know, riding those winners and cutting those losers. And it's not just about cutting the loser. You have to go like one step lower. It's keeping the loss small, not just cutting the loss, because cutting the loss could mean a 20% loss. It could mean a 1% loss. So you really got to be cognizant about how much you're cutting your loss by. And not only that, but you want to also cut the loss at the right spot. A lot of people will take a trade and they'll say, I'm risking 5 cents, 15 cents. But what does that mean? That 5 cents, when you pull up the chart, is just a random place because they want size. They want to go in 20% of their account, and 5 cents away, maybe a 2% portfolio loss. Realistically, like for example, in the save chart, if you wanted to use something more real and it happens to be 12% away, use that 12% and put in whatever it is, 7, 8% of your account. You don't need to always be all in, and you shouldn't be adjusting stop losses based off randomness and off your wants. You should use key levels and key stop places, and just adjust your size off of that, because so many people will stop out of a trade and they'll get chopped up and they'll wonder, like, it stopped me out and now it's like way up here. I would have done great if I didn't stop out. And then they look back and their stop was in a random place. And another thing that I wanted to touch upon, which Stan and Chris both mentioned, was no price that is high is too high, and no price low is too low. You see these things happen often where like things are rapidly moving higher and people are like, no, this can't be. And they start shorting and they're like, oh, it's going up more. They keep shorting. And the same goes for the downside. Like you look at all these things like plug and LCID, all these things that are just grinding lower. And people who like that space of hydrogen or EVs or the car or whatever it is, they start buying because they think it can't go lower. But it could go as low as the markets want to take it. And that's what Stan says. He says, like, you know, the markets, they don't care, essentially. You know, They don't care what you think. They don't care what your agenda is. They don't care what you own, what you're selling. All that matters is what it's doing, basically. And you got to just trade price actions and not your opinions or emotions, because market's going to go with or without you, whether you like that or not.
And just to add to something of like, you know, price can keep going. It's hard to visualize sometimes in like the stock market, but if you go to other markets, you have much more clear examples. And for instance, look at the crypto market, look at altcoins, where you have something go from a $200,000 market cap to 6 billion in the course of 3 days or something. And, you know, you could have something go from 1/100th of a penny to, you know, $4. And it's just, it's not surprising when you look at it in a context like that, where it's like, yes, it's a very gamified structure and everything, but like the price again is just a function of supply and demand. And if you restrict supply enough, and if you have viral demand or, you know, shorts or something that just forces it up, price can go to virtually any level. I mean, HKD went to $80 billion market cap or something, and who's to say it couldn't have gone to a 500? It maybe it even went higher. Maybe it went to a couple $100 billion market cap, and it could have gone to $1 trillion market cap under the right circumstances. Like, it's just price can do insane things.
Yeah, I'm pretty sure it made it into the top 10 of global companies. And I think
if people didn't understand what Chris was saying, it pretty much went from like $10, $15 to $2,500. So that's just maybe easier for people to understand. Is like, that's an insane move, probably the most that anybody has ever seen, you know. And it's just, you never know where it's going to go. I mean, there was no resistance, there was nothing to base it off of, and at that point you're gambling.
Mm-hmm. I think they're great points, and it also like reminds me of, like, mentioned in mine, like, you know, for example, only shorting on, you know, entering on a red candle. That also links to actually stop being, I am now no longer surprised, and actually it's a case of waiting for, not just guessing like a price range, because it's really easy to get the range of something completely wrong, like PHUN, for example. If you got that price range wrong, you know, you're in a little trouble, and if you might, you know, need to be bailed out with an offering. And for me, actually, it's about, you know, not necessarily anticipating range, obviously that helps, but actually waiting for an entry signal, and then equally having a signal of when I'm wrong. And that's really important for me. And that was another aha moment, was the auto size hotkeys that DAS offers. It instantly makes me think of, you know, I have to think of a stop before I enter, and then it automatically sizes me against that stop. And, you know, for my sake, it sucks having hard stops, but I just need them. So that's a great points. And yeah, we're coming up to an hour and a half, so we need to move this on to, so hot takes. And really simply, Stan, is the market rigged?
Is the market rigged? Is the sky blue? You know, I mean, what kind of question is that? Well, here's the thing, Sam. You know, I think for me, that's, you know, 100% the wrong way to view the market in any aspect, right? And it's not because is it rigged or not. I think that's just the wrong question. You know, it's essentially, it's not relevant to your journey as a trader. It's not relevant to your development and your expectancy. You know, your job as a trader is threefold. Number one, be the best risk manager that you can be. Develop some sort of an edge, and then be able to execute that edge with risk management. That's it. And I think when we start putting qualifying terms like the market is rigged, that in itself has a negative connotation, right? It evokes feeling of deceit. You know, it evokes feeling of there's something wrong. And the moment that happens, your brain now focuses on a couple of things. It focuses on, number one, you know, how do I beat this so I'm not deceived? And then a fight to survive. And when that happens, when you focus on those two aspects, you narrow your possibilities as a trader to look at the setup objectively. So when you're thinking about a way to survive, you're not thinking about how to maximize the expected value of this trade. You're not thinking about how to properly risk manage, right? Your sole focus is survival. And that is a point of view, that is a sentiment of a victim. And a victim meaning, a victim mindset, which is power. It's a very powerless stance. And when you come from that victim mindset, you cannot affect change that will allow you to move the needle. So, I think the markets, whether they're rigged or not, are they manipulated in some way? I mean, they're designed to extrapolate value. They're a vehicle that involves all of these different participants looking for the same thing. There's somebody sitting on the other side of that trade. It's just a playing field that you need to learn to play with and abide by those rules. And coming from a victim standpoint is a very weak standpoint, because it leaves you an out. It leaves you an out to not take responsibility and accountability for your own actions and simply say, this shit is rigged, it's their fault.
Mm-hmm.
And that changes nothing.
The market makers saw my stop.
Yeah. Nobody cares. Nobody cares. I guarantee you, nobody cares. It's just an excuse. And in order for you to change it, you got to take responsibility. You got to look within and say, I'm in control of what's happening, and I need to pay better attention. I need to define something. And when you look at the picture from a responsibility and from an accountability standpoint, then you have power. You have the power to change something. If you're looking at it from a victim standpoint, you have relinquished that power to an outside control variable, and you can't do anything but complain about it. So in my view, are the markets rigged is relevant, whether they are or not. I mean, we see the manipulation, right? You see how some of these stocks move, but there's an edge there to be extrapolated.
A great answer, Stan. And since you're so disapproving of my question, which I will just reword it a little bit for you, Chris. If the markets, let's just say, well, by definition, that's comfortable with you, how would you define the markets being rigged?
I think that if you were to look at the market as imagine like a wide open field, and you have a bunch of different games set up, and some of the games are very straightforward, and some of them are like carnival games where there's an inherent huge advantage to one party. So I think that, just like Stan was saying, approaching the market not from a victim standpoint, but of saying that I basically have control over what I trade and what I do, and the biggest risk that any investor or trader faces is not so much the market, it's more it's themselves, really. But I do think that if you are looking in the market and you can spot certain stocks, certain games that do have unfair advantages to one party, and so, for example, like the liquidation trades, where if you have someone who owns 70% of the float, then yes, it is a gamified tape, but you don't have to just blindly trade that. You can choose to basically recognize that and say, this is too gamified for me, and I want more of an even playing field. And so I'm just not going to trade that. And so it's within our control to avoid things where someone else has an unfair advantage. But I think overall, I think the market's more set up to skim little bits of, pennies and high frequency trading, but none of that really matters to retail traders who are trying to, ride a stock from 5 to 3 or from 1 to 2. And so these micro moves are not going to be the difference between your success or failure in the market.
Mm-hmm. That's a great point. And I think that's one of the best things about trading. And often it's compared to, say, poker. But trading, you don't have to put any money on the table. You can just simply say, no, this trade's not for me. There's no, big blind, there's no small blind, there's no ante, nothing. It can just simply pass. So Judah, what do you think? Are they okay? Let me phrase that. Are they rigged? And then let me add on to that. Does it matter if they are?
So I don't know if they're rigged. I don't think they're rigged. I think the markets are difficult. That's a better way to put it. And at the same time, rigged in what sense, and rigged towards or in favor of who? Because me and Stan could be on opposite sides of a trade, and something could come out, it could get liquidated, whatever the situation may be, and I may think it's rigged, and he put in the work and put in the effort and the research and time to profit on that short side there. And because I was naive and I didn't know better, I lost on the trade and he did very well on the trade. So I may think it's rigged just because it didn't work out in my favor. But realistically, I don't think it's rigged. I just think that it will do what it does. And it's difficult. And you got to learn it. You got to work around it. You got to see what your flaws are and what your strengths are. And I don't necessarily think it's rigged. It's not rigged is something you say like when you go to Six Flags and you play a mini game for $5. This is essentially the economy. This is running all the things that we have around us, Apple and Samsung, and it's just the world that we live in. And I don't specifically myself think it's rigged. I think it's a better way to put it. It's difficult, not rigged. I think it's just on you if you say that it is rigged because it is difficult on you. If that makes sense.
No, it does make sense, and you're right. It may just be a question that actually, doesn't need to be answered. But I think there's definitely edge in knowing or having an idea. You're never going to know, obviously, but having an idea of perhaps what the opposite party are looking to achieve, and that's why we tend to get like quite a lot of, liquidity events, because obviously a lot of the time, particularly in small caps, for example, it's a hunt for liquidity, and they find it in areas perhaps potentially where there are a lot of stops, because once it runs through that, they know that the bids are there, whatever, that it can slam down, and vice versa on the opposite way. So I think great points, and I think that pretty much wraps up tonight's show. I just want to thank all of you. Special thanks to you, Stan, for bringing yourself and that fantastic globe that I always see in your background. Stan, you can find in IU the same as, all three of us, or four of us, if you include Stan. We can all be found in IU. Just remember that, leave a comment, a question, a key takeaway. And, some of my biggest, takeaways, in my trading journey have definitely been from, shows like this. So if there was one tonight, please do comment below and any questions, and then Chris or Judah I'll get one of you two to pick out a lucky winner. Thank you all for joining, and we'll see you next week.